Answer 57. Mohan, Vijay and Anil are partners. The balance of their capital accounts being 30,000, 25,000 and 20,000 respectively. In arriving at these figures, the profits, the following in arriving at these figures, the profit for the year ended 31st March 2014 rupees 24,000 had already been credited to the partners in proportion in which they share profit. This means profit has already been credited to them. Profit has already been credited to them. This means that the capital balances given in the question are closing capital balances. This is answer 57. Answer 57. There are three partners, Mohan, Vijay and Anil. We have to first find out the closing capital balances of these three partners. Then we will proceed for other calculations or statement of adjustment. Working notes. Working notes. Mohan, Vijay and Anil. Mohan, Vijay and Anil. They are three partners and these are the rupees. You have been given closing capital. Closing capitals. This is closing capital because it is written in the question that the profits has already been credited to them. The profits has already been credited to them. The closing capital of all the three partners are 30,000, 25,000 and 20,000 respectively. 30,000, 25,000 and 20,000. In the usual process, we will add the drawings which has already been deducted from opening capital. Add drawings. Add drawings. Add drawings 5,000, 4,000, 3,000. 5,000, 4,000, 3,000. Less net profit. Less net profit. Here the net profit is 24,000 and there is no ratio given in the question. That's why it will be distributed in the ratio of 1:1:1. I mean, when there is no ratio, the profits are distributed equally. 8 3s are 24,000. The 24,000 by 3 is equal to 8,000. See, then you have got your opening capital which we require for our calculation of interest on capital. Because interest on capital is calculated on the opening capital balances, I mean opening capitals. Opening capitals. This is 27,000. 27,000, 21,000 and 15,000. Then fair notes, because they have stated we have to show very clearly the journal entry, show your workings clearly. One was in the opening capital was in working notes, and next everything is in fair notes. Fair notes. Statement of adjustment. This is your statement of adjustment. Statement of adjustment. Statement of adjustment. This is our particulars. Particulars. Then there are three partners: Mohan, Vijay, Anil and Farm. Mohan, Vijay, Anil and Farm. And this is like this. Debit, credit for each. Your format should be always perfect. You will have to do it time and again. That's why you will have a good practice for the board exams. Mohan, Vijay and Anil. Debit, credit, debit, credit for all. This is farm. Debit and credit. Then comes your interest on capital omitted. We have omitted interest on capital at 10%. While calculating, the partners have omitted interest on capital. You please write down rupees below each and every column's third line. This is interest on capital. Interest on capital. It is 10%. They will be getting 10%. 27,000 is 10%. It is credit. 2100 is credit and 1500 is credit. And in all, if you add these three, this will come to be 63,100 debit for the farm. Then interest on drawings debited. This has also been omitted and the amounts are given: 250 for Mohan, 200 for Vijay and 150 for Anil in adjustment B. Interest on drawings. Interest on drawings, this has also been omitted. This is 250, 200 and 150. 250 debit, 200 debit, 150 debit. You see, this is 600 credit for the farm. Then we have to make a net interest omitted, because partner has to get interest on capital and has to give interest on drawings. So what is the net amount they should get now? That is net interest omitted. What is the net interest omitted? This is 250, 2700, 200, 2100, 150, 1500, 63, hundred and 600. Net interest means this is net of 2700 minus 250. So this will be like this. This is net interest omitted should have been written in this line. I have wrongly written in the first line. You can show it in the next line. That is 2450 credit, 2450 credit, 1900 credit and 1350 credit, and debit is 5700. This is your net effect entry. Then add these two and write down net loss for total omission, for total omission is equal to 1900 debit for all, and for the farm it is 5700 credit. Now find out the total, and then you will be getting the adjusting journal entry towards the end. This is total. $1900, 2450, 1900, 1900, 1900, 1350, 5700, 5700. Then the next line is your adjustment. Adjustment means adjusting journal entry is to be passed on that basis. That is called net effect. Net effect. This is 550, nil, 550, nil, then this is the ending line is to doubled. Then we have to pass the journal entry, rectifying journal entry, and we are running through fair notes. Journal date particulars ledger folio debit rupees, credit rupees. This is debit and this is credit. Bus. Next, this is the date is 31st March 2014. 2014 March 31st. That is like this. Anil's capital account debited to Mohan's capital account. That is Anil's capital account debited Anil's capital account debited to Mohan's capital account. Mohan's capital account. Anil's capital account debited to Mohan's capital account, being adjusting journal entry passed, being adjusting journal entry passed. Being adjusting journal entry passed. For omission of interest on capitals and drawings. Totaling is, you see the amount, it is 550 for both of them. Sorry, this is 550. This is 550.